Bonjour à toutes et à tous. Merci de vous être connectés pour ce nouveau webinaire que nous organisons sur la dette émergente. Vous savez que c'est une classe d'actifs que nous affectionnons particulièrement et cela depuis un moment, hein, puisqu'on vous invite régulièrement à des manifestations sur ce sujet. D'autant que nous avons la chance, avec l'expertise de Rishabh Tiwari, d'avoir une gestion très conservatrice par rapport à d'autres produits. Pour ceux qui ont suivi un peu nos fonds pendant la crise, vous avez pu constater qu'ils avaient quand même très bien résisté et donc avaient tout leur sens dans une allocation. Nous allons démarrer aussi avec Josipa Markovic, qui est stratégiste sur la partie dette émergente et donc qui va vous faire un petit peu un panorama de où nous en sommes aujourd'hui et donc maintenant à quoi faut-il s'attendre. Et nous laisserons ensuite Rishabh Tiwari intervenir sur la partie gestion, sachant que, comme nous vous l'avons annoncé dans l'invitation, Rishabh s'exprimera en anglais. Josipa, je te laisse la main.
Bon, merci beaucoup Marie-Valérie pour cette introduction et bonjour à tous. Oui, moi aujourd'hui, je voudrais vous donner un aperçu de la situation économique et aussi des perspectives des marchés émergents. Une partie du monde qui n'était pas vraiment été sous les projecteurs au début de cette crise sanitaire, mais qui a récemment vraiment attiré l'attention parce que des divers pays, des diverses régions sont vraiment devenus des nouveaux points chauds du coronavirus. Donc, débutons par le pays où tout a commencé, ce qui est la Chine. La Chine a probablement déjà passé le plus dur avec son économie qui s'est contractée de 6,8% au premier trimestre cette année, comme nous pouvons le voir ici sur ce graphique. Mais comme la Chine a été le premier pays touché par le coronavirus, il a été également le premier à s'en sortir. Et le pays prend désormais la tête de la prise économique. Et effectivement, le taux de croissance du PIB du deuxième trimestre qui a été annoncé qu'aujourd'hui a montré une amélioration considérable avec un taux de croissance de 3,2%, donc déjà bien supérieur au niveau de l'année précédente. Et ensuite, oui, si on passe à cette page ici que vous voyez, on voit un des moteurs qui a attribué au redressement économique en Chine. Donc, ces derniers mois, le gouvernement chinois a vraiment renforcé ses mesures de relance. Le taux de croissance de crédit accordé, ici cette ligne grise, a accéléré de 12,8% en juin, aidé notamment par l'émission d'obligations d'État qui étaient utilisées principalement pour les projets d'infrastructure. Et comme ce quota d'obligations locales a considérablement augmenté, cette année-ci, nous attendons aussi une future hausse de cette relance budgétaire. Et sur le prochain document, on constate que ces mesures de relance ont effectivement produit leurs effets. On voit ici que l'investissement dans l'infrastructure, ici cette ligne rouge, s'est rapidement rétabli et a dépassé son niveau de 2019 déjà en mai. Et pour l'instant, le facteur principal qui pèse encore un peu sur une reprise substantielle de l'économie en Chine est vraiment la consommation. Et ça se voit parfaitement sur l'illustration suivante. Donc, sur ce graphique ici, nous voyons que les indicateurs économiques clés de la Chine signalent que la production est globalement revenue à la normale, que particulièrement ici, la production industrielle montre des taux de croissance positifs par l'an dernier. C'est ici dans ce graphique la ligne rouge. Mais en même temps, on voit aussi que le rebond de la consommation, donc la ligne rose des ventes de détail, était nettement moins prononcé. Et une des raisons étant la distanciation physique qui continue de s'appliquer, un taux de chômage qui est beaucoup plus élevé qu'avant la crise, etc. Et tout ça freine vraiment les consommateurs. Ensuite, oui, passons à la page suivante. Il y a quelques semaines seulement qu'on a observé une recrudescence des nouveaux cas de coronavirus à Pékin. Et ce nouveau foyer est vraiment un rappel aussi pour la Chine que la menace d'une seconde vague du coronavirus plane toujours. Et bien que nous ne pensions pas vraiment que de nouvelles mesures de confinement à l'échelle nationale, à l'échelle du pays, vont être nécessaires, ça signifie quand même que les consommateurs vont être plus prudents dans leur comportement et que aussi les mesures de distanciation physique ne sont pas vraiment prêtes d'être levées complètement. Et ça, c'est clair que c'est un mauvais augure pour tous les services aux personnes. Ensuite, sur le prochain slide, un autre ombre au tableau, c'est les relations entre les États-Unis et la Chine qui continuent à s'aggraver cette année-ci particulièrement. Donc cette année, ce ne sont pas les questions commerciales qui seront au cœur des débats. Les États-Unis sont plutôt passés aux problèmes technologiques, financiers et aussi géopolitiques. Donc la plus grande source de troubles potentiels est la situation à Hong Kong. Donc la Chine y a adopté une loi de sécurité nationale qui ne laisse aucun doute. Le contrôle de Pékin sur les citoyens de Hong Kong va considérablement augmenter et le risque d'une plus vive réaction de la communauté internationale a nettement augmenté. Donc, les États-Unis, par exemple, ils ont déjà supprimé certains privilèges spéciaux accordés à Hong Kong. Trump a aussi signé une loi qui punirait les banques qui ont interagi avec des personnes sanctionnées. Et de plus, aussi, le Royaume-Uni a bloqué Huawei de son réseau britannique du 5G. Et cela nous montre que de plus en plus de gouvernements se voient contraints de choisir un camp, donc les États-Unis ou la Chine. Et beaucoup pourraient choisir les États-Unis et cela ralentira également le progrès technologique de la Chine. Donc, pour cette année et surtout à l'approche des élections aux États-Unis, on s'attend quand même à un durcissement du discours xénophobe. Ensuite, passons au reste des marchés émergents sur cette diapositive que vous voyez. Donc, la situation de la pandémie dans ces pays reste très préoccupante. Contrairement aux pays développés et aussi contrairement à la Chine, comme on l'a vu avant, l'inquiétude ne porte pas sur une potentielle seconde vague du coronavirus, mais en fait sur une première vague qui n'en finit pas. Et on le voit très bien ici sur ce graphique avec la ligne rouge qui représente des cas, des nouveaux cas du coronavirus quotidien pour les marchés émergents hors la Chine. Et pour l'instant, c'est notamment l'Amérique du Sud, l'Inde, l'Afrique du Sud, etc., qui peinent à contenir la propagation du virus. Ensuite, penchons-nous sur le document suivant. Malgré cette hausse de cas qu'on a vu juste avant, dans le slide juste avant, les marchés émergents se voient forcés à assouplir progressivement aussi les mesures de confinement afin d'éviter un coup encore plus dur à l'économie. Donc ici, sur ce graphique, on voit les points jaunes qui représentent le degré maximal de sévérité des mesures de confinement par pays. Et les carrés rouges, ça représente le niveau actuel de ces mesures, qui se sont apparemment globalement assouplies. Et au milieu de ces assouplissements, les indicateurs à haute fréquence montrent aussi que l'activité reprend progressivement. Et pour cela, on peut passer sur la slide suivante. Donc, au milieu de ces assouplissements, ici, on observe vraiment, par exemple, en regardant l'indice Google de la mobilité, qui suit le nombre de visiteurs dans différentes catégories, comme le commerce de détail et les loisirs, dans ce cas ici, nous voyons qu'au cours du mois de juin, les choses ont commencé à s'améliorer. Donc, la mobilité, l'activité économique a repris un peu. Mais cette reprise est très lente et la plupart des économies restent encore à des niveaux très éloignés de ceux d'avant la crise. Et sans surprise, la dynamique la plus faible est observée aussi dans les pays les plus touchés par le coronavirus, à savoir l'Amérique latine, l'Amérique du Sud, avec les pays comme le Brésil, Mexique, Colombie, Pérou, Chili, et aussi l'Inde. Il existe en fait de nombreuses raisons qui expliquent la vigueur particulière de l'impact économique dans les marchés émergents. Et une des raisons est la faiblesse des systèmes de santé. Donc, l'Amérique latine et l'Asie du Sud-Est sont vraiment en queue de classement en termes de capacité de soins, mesurée ici par la disponibilité des médecins et aussi par la disponibilité des lits d'hôpital pour 1000 habitants, alors qu'en même temps, le nombre total de cas de coronavirus par million d'habitants, représenté ici par la taille des bulles, est le plus élevé dans les pays d'Amérique latine. Le Chili, le Pérou et le Brésil sont les plus touchés. Et dans ces régions aux conditions de soins précaires, le facteur peur est particulièrement prononcé, de sorte que même avec l'assouplissement des mesures de confinement progressif, les consommateurs restent réticents à vraiment retrouver leur ancienne habitude de consommation. En plus, passons à la page suivante, l'économie de nombreux pays émergents repose principalement sur les exportations. Et avec un monde en récession, la demande des biens qu'ils produisent va rester timide tout au long de cette année. Et de plus, un certain nombre de marchés émergents sont particulièrement dépendants du tourisme extérieur. Et comme nous nous attendons à ce que ce secteur, le secteur du tourisme, va être un des derniers à se remettre, des pays comme la Thaïlande, la Malaisie, le Singapour, etc., comme on le voit ici sur la graphique droite, vont subir de lourdes pertes économiques. Et de récents indicateurs traduisent déjà ces évolutions, comme le montre ici ce graphique. Donc, dans la partie supérieure du graphique, on voit d'une part que les recettes générées par le tourisme international en Thaïlande sont tombés à 0 au mois d'avril et de mai. Donc, ça veut dire qu'il n'y avait vraiment aucun touriste étranger qui est entré dans le pays pendant ces mois. Et comme la levée des mesures de confinement ne sera que progressif, les chiffres des mois à venir resteront probablement faibles aussi. Et dans la partie inférieure du graphique, on voit que le taux de croissance annuel du volume d'exportation des marchés émergents est sur une pente descendante. Et vu la récession mondiale, une grande reprise n'est pas attendue avant un bon moment. Ensuite, passons sur le prochain graphique. Une autre raison pour laquelle les marchés émergents sont particulièrement touchés est le fait que plusieurs d'entre eux sont des exportateurs des matières premières dont les prix cette année ont chuté. Et particulièrement le prix du pétrole n'a pas encore retrouvé leur niveau précédent, leur niveau d'avant la crise. Donc ici, le dernier point sur ce slide que je souhaite aborder, les économies émergentes entrent dans cette crise avec un niveau de dette bien plus élevé, bien plus important que par le passé. Et il existe en fait une limite budgétaire pour stimuler les économies de manière substantielle. Donc cela, c'est notamment traduit dans les plans de relance des gouvernements, relativement moins dotés par rapport à ceux des pays développés. Et si on passe au prochain slide encore, on voit que la situation budgétaire est particulièrement problématique pour des pays comme le Brésil, l'Inde et l'Afrique du Sud. Et ça, ce sont des pays qui seront probablement forcés d'ordonner des coupes budgétaires quand le pire est passé. Donc, le ministre sud-africain des Finances, par exemple, a déjà annoncé des coupes budgétaires, comme le pays risque vraiment de tomber dans une crise de dette souveraine. Et le Brésil aussi a annoncé en mai son plus large déficit budgétaire historique. Et enfin, cela nous montre clairement que de nombreux marchés émergents ont vraiment une marge de manœuvre restreinte pour une relance budgétaire en pleine crise. Et toutes ces raisons ici que je vous ai expliquées nous montrent que les marchés émergents ne seront pas la locomotive dont on parle qui va permettre de sortir le monde de cette crise comme il avait été dans la crise de 2008, par exemple. Bon, avec cela, ma présentation touche à sa fin. Si vous avez des questions, je serai très contente d'y répondre à la fin de la prochaine présentation de Rishabh Tiwari.
Merci Josipa. Donc on va continuer avec Rishabh. En tout cas, merci pour cette présentation. Rishabh, it's now to you.
Thank you, Marie-Valerie, and good morning, everyone. So today I would like to talk a little bit about emerging market bonds, what's happening in the asset class, and how we see the world. And also I would like to present our solutions or funds that we are offering. So before I start, let's just look at what's happening today in the global economy. So situation does not look very nice. We all know we are having one of the worst recessions on record because, of course, of COVID-19 crisis, which is still going on, as Josipa mentioned in her presentation, especially in emerging markets. There are other issues as well, such as low oil prices, US-China conflict, which continues, uncertainties around Brexit. But there is also this green bubble, as I've shown in the presentation, which is essentially the unprecedented support from central banks and governments. We have seen, especially led by US, a significant amount of money that has been pumped into the system, but also by other developed market central banks, be it ECB or Bank of Japan. And what this has made, this has done is essentially lifted all asset classes. And if you look at the market, it is clear that it is looking for a V-shaped recovery. Emerging markets, bonds, equities, all kind of asset classes have also benefited a great deal from this stimulus. And most of the problems have been ignored to an extent. Then maybe we move to the next slide, please. So here I've shown a few asset classes and their performance year to date. What I have taken is in the red line is emerging market hard currency bonds. That is mainly US dollar denominated bonds. Then you have local currency in pink, and then global high yield bonds, emerging market local currency bonds, and in blue is MSCI emerging market equity index. So what I'm trying to show here is that all the asset classes suffered in March, and since then there has been a recovery. But if you look at year-to-date performance, emerging market hard currency bonds have clearly outperformed all other risky, or let's say comparable risky asset classes. So here EM bonds are the only asset class which is above zero, let's say. So it has already returned 2.5% year to date in dollar terms, whereas all the other asset classes are still in negative territory. This shows kind of the resilience of hard currency corporate bonds in emerging markets. So I would like to talk a little bit about this asset class, because that is where we also focus, and I believe that this is an asset class that offers best risk-adjusted returns. And I would like to go into the reasons for it. So on this slide, you would see a breakdown of the universe. We have on the left-hand side the country weights in the universe, and on the right-hand side we have the sector weights. And as you can see, that this is a very diversified universe. So you do not have any country except for China which has a weight of more than 10%. Everything else is below 7% actually. This is investment grade, that's where we are focused on, and this is the investment grade universe. So how does it help? It actually provides us a very good diversification, meaning that we do not need to, as investment managers, we do not need to have a significant exposure to any single country. And in fact, a lot of countries, if we do not like them, we can completely exit them. So for example, if to give you an example, if we do not like Brazil at this point, then we do not need to invest any dollars into Brazil, because it is only 2% weight in the benchmark or the universe. So this allows me as a portfolio manager to really position into countries that I like, into the countries which are on an upswing, and ignore the countries which are on a downtrend. Similar picture is on the sector side. It is also quite diversified. On the right hand side, just would like to mention that financials, which form about 1/3 of the universe, it is not correct to look them as a single sector, because the correlation between financials in different EM countries, it's almost negligent, meaning that banking sector problems in India are not going to impact banking sector in Mexico, and vice versa. So it is a big chunk of the universe, but it is quite uncorrelated. Let's move to the next slide, please. So here I've taken the leverage from 3 different geographies, from emerging market, from US, and from Europe. And in red line, you would see the red bars are the net leverage, which is debt to EBITDA. For EM companies, all investment grade rated. In the pink is US companies leverage, and in gray is European companies leverage. And it is clear that EM companies, EM investment grade companies have by far lowest leverage. But what is interesting is when we look at the development since last 5 years, we see a clear trend that EM companies have decreased their net leverage, whereas Europe and US companies have increased the leverage. Why this happened? In my opinion, this happened because after 2013 taper tantrum, emerging market companies realized that they need a strong balance sheet and they cannot be at the mercy of credit markets all the time. And this is why we've seen a significant discipline in EM companies. And this is the reason why I believe they have decreased their overall leverage. If you move to the next slide, please. So here I want to show the corporate default rates and in emerging markets. And as you would see, once again, the default rates have trended down since 2016, in line with what I said earlier, that since 2015-16, the companies have been quite disciplined, and we can clearly see that the default rates have trended lower since then. Even in 2020, until first half or until June, we recorded around 2.5% defaults in emerging market high yield, which is much lower than what you have seen in US and Europe. For this whole year, it is expected that the default rates in EM would be around 4.5%. Once again, much lower than what is expected in US, where expectations are above 10%. So once again, a strong balance sheet do pay off. Moving on to next slide, please. Here I've tried to show the Sharpe ratio for different asset classes. So you have all kind of asset classes on the bottom, EM corporates, sovereigns, US market, Euro market, and then equity markets on the right-hand side. In the red bars is the Sharpe ratio when you look for the last 10 years. In the pink bar is the first 5 years, and the gray bar is the last 5 years. So when you look at the last 10 years, the Sharpe ratio for emerging market corporates once again has been the best. Although some other asset classes are close, US IG, US high yield, Euro IG, these and frontier markets, they also had good Sharpe ratios. But if you look at the gray bar, which is the last 5 years, and compare the Sharpe ratio, there EM corporates is a clear winner. So I mean, Sharpe ratio of 1.8, and next best is close to 1 for frontier markets or US IG and US high yield. So once again, we have seen this deleveraging effect really reflecting into asset prices and returns that we have generated over the last 5 years in emerging market versus the volatility. And last slide on this topic, if we go to the next slide. So here I've compared the same picture, so Sharpe ratio, but between investment grade in different EM regions and the high yield. So the first, on the left-hand side, you have Asia, Europe, Latin America, and Middle East investment grade. And on the right-hand side, you have the high yield bonds from the same regions. And once again, the red bars are last 10 years, pink are the first 5 years, and gray are the last 5 years. So once again, what we've seen is that if you look at the first 4 categories, they in each category, in each time horizon, the Sharpe ratio has been better for investment grade compared to high yield. So once again, my point being that investment grade bonds have delivered better returns, risk-adjusted returns in emerging markets. If we move to the next slide, please. So I would just like to recapture what are the things that we really like about this particular asset class, or why do we focus on hard currency investment grade bonds? So number one, as I mentioned, this has very high diversification. For example, if you compare it to sovereign bond market in emerging markets, which is also quite popular investment vehicle, I feel that the corporates give you much bigger diversification power. Just because there are more companies than countries, you are able to diversify yourself more. Then the duration of EM corporates is lower than, for example, EM sovereigns, or even if you look at US investment grade, the duration is around 5 years, which means that the interest rate risk that you take on your portfolio is lower for this asset class. Then third point, since most of these bonds are issued in dollar, there is no currency risk or no local currency risk, at least directly. And when we talk about euro investments, dollar euro can be hedged pretty easily. It's one of the efficient markets. In the past few months, we've seen the hedging costs have also come down quite a bit. So for euro investors also, we do not have to look at hedging local currencies. It's pure and simple US dollar hedging. Then why investment grade? I mean, what are these companies like? So most of these companies are pretty large companies in each of their countries, market leaders, and well covered. So well covered by media, by research analysts and rating agencies. So the amount of transparency that you get in investing in investment grade bonds is much higher than, for example, you would have in high yield market where the companies tend to be smaller. And last but not the least, we like this hard currency bond market also because all the bonds are governed by international laws by definition. So as an investor, we do not have to worry about local laws or local judiciary system. These are normally governed either by English law or American law, so to say, and they're listed on international exchanges. So this is a summary of why we like it. Now let's move on to what's happening now. So I mean, how do we see the world today? As I mentioned, it is not a pretty picture. I think it would be a very challenging year, despite the fact that we have seen quite a strong markets rally. I think the situation on the ground is still quite challenging for emerging markets, especially. I believe that we are still in the middle of the pandemic, and the humanitarian as well as financial cost of this pandemic would be quite big, and especially for emerging markets. When you look at the hospital infrastructure or the amount of capacities these countries have to deal with these pandemics, it is very difficult. So there is no way around it. I think it would be quite difficult. Also, the fiscal deficits in emerging markets would increase. We have seen most of the countries having welfare programs or pumping money into the system. Unfortunately for emerging markets, their currency is not US dollar, so they cannot print it, and so they have to borrow dollars, and this means that their deficits are going to increase, and this could put rating pressure on these countries and sovereign entities. Then also talking about crude oil, we've seen quite a strong rally since March until now, but we have to remember that oil is still around $40 a barrel. This is the price which is not profitable for a large number of companies which are producing oil, and this would have impact on their balance sheets, on their credit profile. So I would be cautious there. Last but not the least, we still are going through the first wave. A lot of market participants and healthcare experts have warned about the second wave, which might hit us, and we might once again see a significant slowdown. So this risk would continue to remain, and emerging markets are not immune to that, of course. So this is the overall picture. within this picture, we still prefer or like hard currency emerging market bonds. Why? Because number one, as I mentioned in my previous slides, we think that this one sector has is still better prepared than many other sectors, because they have made strong balance sheets. So these kind of slowdowns, many or most of these companies should be able to weather the storm. So there would be volatility, but I believe that these companies are, especially the investment grade universe, is well positioned to weather any storm that comes. Then I think that the technicals are also very supportive. So this year we expect that net new supply of bonds from emerging market would be close to zero, meaning that the total new supply would be offset by the maturing bonds and called bonds and coupon payments. So this means that the money that is coming into emerging markets needs to find a place, and this would create technical positive for this asset class. Last but not the least, the central bank and fiscal stimulus, as well as very low interest rates across the globe, call for so-called search for yield or hunt for yield, and emerging markets are clear beneficiary of that. And especially emerging market hard currency bonds, we have continued to see positive inflows into this asset class, and I think this technical would also support the valuations in this asset class. If we move to the next slide, I would like to talk about what are the countries and investments that we do not like and what do we like. So first of all, we try to avoid coronavirus risk, meaning that sectors that are directly impacted by coronavirus, as well as countries which have shown bad policies, and we believe that they would suffer because of this virus economically, we try to avoid that. So countries like Brazil, where we have seen quite a weak response by the government, the country is facing severe health as well as financial crisis. Sectors such as tourism, entertainment, consumer, transportation, etc. These are directly impacted, and we would try to avoid them or underweight them. The countries which are also on a deteriorating path, so countries like India, which is, by the way, also affected by coronavirus very, very heavily, but also apart from that, they are on a downward trajectory when it comes to their fiscal situation and growth situation. So we would remain cautious on this country. Also Colombia, it is directly impacted by the low oil prices. Also coronavirus is impacting the country, and the fiscal balances in the country are also under stress, and we think that the country might face a rating downgrade in short to medium future. Then apart from that, the countries with high political risks, so Saudi Arabia, as well as Hong Kong, which has been more in the news recently, we try to avoid these countries. What do we like? We like countries which are either on an improving path. So countries like Indonesia, which have been quite proactive. They are beneficiary of low oil prices, for example. Countries like Chile, which are impacted by virus, but nevertheless they have a very strong credit profile. So Chile is one of the best capitalized country or highest rated country in Latin America, and we continue to prefer such strong countries. And then second, we like companies which are countries that are benefiting from local support. So for example, Qatar, that is a country that has a very strong demand from locals. Also the state-owned enterprises in China, the high quality or very strategically important companies in China, we continue to like them because we believe that the support for these companies from the government would continue to be there. Then if we move to the next slide, I would like to talk about what do we offer to get exposure in emerging markets. First of all, as I earlier mentioned, we are offering relatively conservative exposure to emerging market, meaning better risk-adjusted returns. And we offer two products. One is Swiss Life Bond Emerging Market Corporates. This is a fund that we launched in 2014, has assets of more than US $470 million. The fund essentially focuses on only investment grade rated bonds, mostly in US dollar, a few in euro, and only in emerging markets, of course. And then we are investing in more than 30 countries and more than 150 issuers in this fund. So it is a highly diversified fund. It also has a 100% hedged euro and Swiss franc share class. So that means that as a euro investor, one can invest into it without worrying about euro dollar exchange rate. Then second fund that we offer is Swiss Life Bond Emerging Market Corporate Short Term. This is a similar fund, but investing only in short maturity bonds, meaning up to 2 to 3 year duration bonds. So it is less risky in that sense that it is not investing in more credit risk or more duration risk, but at the same time, it is providing even more attractive risk return profile. So total returns for this fund are expected to be lower than the other fund, of course. But when you compare the Sharpe ratio or risk adjusted returns, this fund is quite attractive because we are holding a lot of bonds until maturity in this fund. The fund by definition has low credit risk, so low volatility. And the trading costs are also much lower for this fund. In this fund, we are also focusing on investment grade. The benchmark we use for this fund is pure investment grade. However, we have allowed ourselves to have a tactical quota of 10% where we can invest in high yield bonds. So if we think that markets are on the rise, we are able to take advantage of higher yielding high yield bonds in this fund. However, this is completely tactical, and whenever we invest in high yield bonds, that is an off benchmark position because our benchmark is investment grade. The fund was launched actually in end of 2017, so it's soon going to have 3 years track record. Assets are above $280 million. And this also offers 100% euro hedged share class, similar to the other fund. Now, let's look at the performances. If we go to the next slide, please. Or before that, let me just give you a quick overview of how this fund looks. So yeah, I mean, as I already mentioned, this is pure investment grade product, average credit rating of A- to BBB+. As I mentioned, very highly diversified, so 170 issuers in this fund. And yield to maturity as of now is around 3.18% for this fund. If we move to the next slide, please. These are the characteristics of the fund. I would not go into the detail. This just details how the fund is offered. This is the performance of the fund since inception. So here I have taken all the pure investment grade funds that are available in the market that I could find. And we have been comparing ourselves to these peers since many years. And as you can see, since inception, we are ranked number 2. Only one fund has been able to outperform. But apart from that, we have performed very well when compared to other peers. Yesterday, actually, we could not put that slide into the presentation, but there was a report that just came out yesterday by a German firm which was comparing different emerging market funds. And there we actually ranked number 1 in terms of Sharpe ratio over the past 5, 3, and 1 year when we compare to all emerging market corporate funds. So not only investment grade, but also blended strategies. We were number 1 ranked for these periods. If you go to the next slide, I just want to show the performance this year. So as you can see, I mean, we are once again in red, and the other funds are in different colors. So we are again number 2 in terms of performance this year, year to date. But what is also interesting to look at March-April period, when all the funds had the big drawdowns, we clearly outperformed at that time because of our conservative and risk-aware approach. If you go to the next slide, please. This is the snapshot of the short-term fund. And here, as I said, the duration risk is very, very low, so only 1.8 years of duration, and yield to maturity of close to 2.4%. Then I would go to next slide. This again gives just the offering, and here the performance of the fund with respect to its peers. Here I have to tell you that there are not really very close peers for this fund, because as I mentioned, we are focusing mostly on investment grade bonds, and all the short duration funds available in the market, they are predominantly focusing on high yield. So it is not fair to compare against such peers, but since we do not have a investment grade focused short duration fund in the market, we show you the other peers. And as you can see, we are somewhere in the middle. But what is interesting to see is the volatility of this fund. So once again, in the report I talked about, we were ranked ahead of all of these funds when it comes to Sharpe ratio. In fact, we were ranked number 2 over the history of the fund. The number 1 ranked fund in Sharpe ratio was some China focused or Asia focused short duration fund. But when it comes to global emerging markets, we were ranked highest when it comes to Sharpe ratio, just because we are focused more on less risky bonds here, as you can see in the performance volatility, just looking at the chart. If you go to the next slide, I would like to show the performance year to date, and once again the similar picture comes. So here you have all the peers which had massive drawdowns in March. For our fund, it was less than 2% or 2.5% in March, and we are already ahead of or already positive this year. Funds like Ashmore, which is one of the most famous names in this peer groups, they performed very, very badly because of a very large high yield quota in their fund. So once again, this is very conservative income product where we aim at having low volatility and good risk-adjusted return. With that, I would like to end the presentation from my side and hand it over back to Marie-Valerie.
Okay, thank you, Rishabh. Your presentation are really complete. Je ne sais pas s'il y a des questions. Je n'ai rien vu apparaître pour le moment. Cela étant, effectivement, les 2 présentations étaient très, très complètes, très précises. J'espère que vous avez bien apprécié, vu justement la résistance qu'ont les produits de Rishabh. C'est ce que je vous avais dit en préambule. C'est vrai qu'on obtient sur ces fonds des performances qui restent positives sur le long terme, avec une volatilité très très maîtrisée. Et comme l'a largement dit Rishabh, c'est vraiment le fait de se concentrer sur de l'investment grade par rapport à nos concurrents qui fait que nous arrivons à de tels résultats et la qualité aussi de sélection des titres.
Thank you very much, Marie-Valerie, and I would like to thank everyone who was listening to us today. Yes.
Merci beaucoup de mon côté aussi. Merci.
Merci. Bonne journée à toutes et à tous et à très bientôt.